Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello. Welcome to the COB. I'm Nadine Blaney.
I'm Juliette Sarli. And Nadine, once again, we are seeing the battle between the banks and the resources, some weakness as well in the energy players when we continue to see what's happening with Venezuela. US President Trump putting some fighting words, if you will, on social media today about the fact that Venezuela is going to give some of those barrels of oil to the US. And we're going to be speaking about that with Kai Chen.
Yeah, we will.
GBA Capital.
Some pretty strong words coming from Trump about Greenland. Does this completely upend the world order as we know it, or have done so since the end of the Second World War? Big questions. Don't know if we'll get to the ultimate answer, but we will try. And at least what we do here on this program and this podcast is to just try to get a sense of what's going on there in markets, sum up the day for you, get you across what we've covered on AusBiz throughout the session, just in case you've missed anything. And of course, make sure that you're abreast of what's happened on the market today.
Yeah, indeed. Let's have a look. There we are. We are up by about 0.2%. You can see that nice spike that came through around 11:30. That is as inflation came in cooler than forecast. A 3.2% trimmed rate for the year to November, 3.4% on the core inflation print. Of course, less than what the market was looking for, still above what the RBA is looking for, but you saw the Aussie dollar spike. Got to remember it's though at those October 2024 highs, and the market pick up some ground, but then it sort of fell away again around lunchtime Sydney time, and we've closed just 0.2% higher.
Yeah, it's really interesting. I've got my eye on Japan's Nikkei. It's extending its declines. It's now down by about 1.25%. We had China saying that it will not be exporting dual-use rare earths to Japan. And so that has put a real rocket under Linus, for one. But as you said, Juliette, this has been yet another day of some pretty strong performance coming through from the materials sector. We had copper, of course, hitting that record high yet again overnight.
Yeah, some good moves in iron ore, nickel as well. Then it came to that inflation picture, as we said, cooling down. And this is a big one, that media merger finally going through. Southern Cross Austereo and Seven West Media, which stopped trading on the ASX or being listed from December 30. But there's been a bit of a shake-up at the top as well. So Jeff Howard being appointed CEO of Southern Cross, replacing John Kelly. And then you've got the CFO of Seven West stepping down, and a bit of a shake up on the board as well. So you've got Kerry Stokes, you've got Ryan Stokes, Marina Go, who's of course the magazine maven, and a number of people on that new board.
You can tell she's got an interest in the media, yes. And Kerry Stokes, of course, busy with that blockbuster deal for BlueScope that they're trying to get over the line. We talked about that on the program yesterday, but that media merger has brought media to the fore today. Let's check out how these stocks have performed. And note that Nine is up by 0.9% to $1.11. There's some synchronicity in that figure there to end the day. News Corp at $44.69.
Yeah, and we should not have Seven West there because, of course, it ceased trading on December 30. But will be interesting to see what Southern Cross does when it comes back online tomorrow, I believe. Let's have a look at what's happening with energy there, as we saw that big momentum in crude oil amid US President Trump's post on social media earlier, and that saw the WTI price in particular fall quite heavily in after hours trade, and that's weighed through on our energy players as well.
Yeah, saying that it's in talks with Caracas that they will be selling Venezuelan oil. All right, let's get a look at copper. Bit of a better story there, I suppose, if you're BHP, up by 1.32%. Sandfire Resources shedding 0.2% to $18.95.
All right, some of the other stories we're following, of course, we touched on there, the merger being completed between Seven West Media and Southern Cross. That's what Southern Cross has done over the past year or so, and of course, worth noting, I think it's Southern Cross Austereo now.
Okay. Linus, as I mentioned, rallying as China has banned certain rare earths exports to Japan. And apart from the price of the underlying commodities, we've had some of these production reports coming through as well, Jules.
We absolutely have, and it really was a focus on the gold. So Capricorn came through with its numbers, sending shares up by more than 2%. West African Resources hit a record high as well after it came through with an upbeat quarterly number.
Totally switching sectors, Macquarie Technology Group saying that Peter James will retire as chair after 11 years at the helm. And stock of the day, 4D Medical saying that UC San Diego Health has become the 4th U.S. academic medical center to adopt its CT-VQ technology for lung imaging. It was the stock of the day.
It was indeed. All right, let's welcome to the guest, to the desk, to the show, Kai Chen, our guest from, of course, Kai MPC Markets. Great to have you with us, Kai, and just wanted to get your thoughts here on what we're seeing with these posts coming through from the president. He loves a bit of social media, doesn't he? But to Nadine's earlier point, potentially a big upset in the world order as we know it, with these threats on Greenland now too.
Yeah, no, absolutely. We've seen quite a lot happen within the last week. And you're exactly right. I think, we're seeing quite a lot of geopolitical shifts, and it's really moving. I think in terms of what Venezuela brought was basically, initially I think the calls on Greenland was a bit of a bluff, but I think the Europeans are taking it a bit more seriously. But I think it has larger implications in the long run because, with the NATO alliance, it does really put a fray into it. So if a NATO member, which the US is the largest and most powerful member, if they were to be the aggressor, it really puts the alliance into question. And we saw the Danish Prime Minister come out and basically, telling him to back off. But I think, it's really a bit of a guess. Who knows in this day and age what he can do. But I think basically, it does really fracture the trust within the relationship. So for us, actually, we're seeing this as an opportunity against in the defense sector, and that's one we've been on for the last year or so. I think it does really put into play some of the European defense stocks, so like base systems, Rhine Metal. Basically, Europe has to rearm and they have to take care of themselves. In terms of what oil implications had, as we saw today, we saw oil coming off a little bit more as basically more supply comes on from from Venezuela. We will see continual oil prices drop, but again, it's a long-term project. It takes quite a long time for these oil assets for the infrastructure to be built. So we're looking at over the next 4 or 5 years if that was to come to fruition. But I think the main question is, what stocks should you buy? And I think the main beneficiaries will be a lot of the infrastructure stocks in the US on oil. But also Woolley Parsons was an interesting one that we looked at that might be a little bit underpriced that could benefit indirectly from this. So, and of course we mentioned Japan as well. Geopolitically, there's a bit of tension going on with China, and I don't see it being resolved anytime soon. It's quite fundamental in terms of the position that the new Japanese Prime Minister has taken. And again, that's why we're seeing a bit of a uptick in terms of rare earth and rare earth materials.
So Kai, I take your point, particularly when it comes to the defense thematic. But I've been told many times over the years that geopolitics, at the end of the day, really don't impact markets in a significant way. I mean, if you think about even tariffs last year, the Ukrainian war, which has been going on for 5 years now. I mean, as investors, are we right or wrong to pay too much attention to geopolitics?
I think if it's a short-term geopolitical situation, that you're completely right. We've seen a lot of the Middle Eastern conflicts. They have a very short-term spike or effect on the market. But I think this is much more fundamental, right? Because basically what's been happening is that Europe's been underspending in terms of their defense and been reliant on the US as basically to take care of the majority of the load. But it's fundamentally shifting. I don't think this is going away anytime soon. The question is, does it change and revert back after the Trump presidency, or if it will end? But I think there's broken trust, and it's come to a realization that Europe really has to take care of itself. So, in my opinion, European defense stocks are a medium-term play. So I don't think it's something that's very short-term.
Let's then talk in terms of what we're seeing with the overall macro picture here with our economy as well, because inflation did cool somewhat, Kai. We've been noticing a lot of the retail stocks being hit amid these thoughts that there could be an RBA rate hike, which I believe NAB is still calling, and Citi perhaps too. Your thoughts on what we saw from the inflation print today?
Yeah, no, it's really interesting because we saw, the last couple being a bit higher than expected. Again, today's expectations were 3.3, and it came out 3.4. So, it was a little bit under what analysts were predicting. However, I don't think it rules off rate hikes for the RBA, but it does give them a bit more space to decide, right? So, basically the market's pricing out a rate hike in February when the meetings begin again. However, it's still on the board for the next half a year. So I don't think it's mission complete. It's still at it's above the higher target range. So the RBA higher band is 3%. It's above that. I think the question is more when.
All right, so if we are to see a couple of interest rate hikes this year, that will no doubt have ramifications for certain parts of the market, but one of which has been really strong as of late is the lithium. The lithium names, after going through such a tough time, seems to be having a bit of a renaissance, but can it last?
Yeah, it's an interesting question because we have obviously seen in the last 2 years lithium prices dropping off quite a bit, but it has stabilized, and over the last 2-3 months it has seen a bit of a recovery. And a lot of these lithium mines are very underpriced. So Liontown, it went to about 60 cents at the lows. Now it's back at about $1.80. So we've been calling on that one as a quality asset. It has a tier one mine. It's in production, delivering on in terms of expectations. Pilbara as well, it was quite undervalued at a certain point. So if you got on a couple of months ago or even now, they're still fairly undervalued, right? So if we do see continued spodumene underlying prices go up, I think we can actually see a bit more positive flow in lithium.
And I guess a quick word as well on the tech space, given that we're new year, same themes, AI is driving everything it seems again, and the IT sector, albeit small, has had a good start to the year.
Yeah, no, absolutely. It's a bit of a continuation. There was a little bit of wobble towards the end of the year. I think the big theme is, I think it'll be consolidation this year because, when we're talking about it a year ago, it was all hype. Basically, any company that had AI in it or were looking into AI, they got a massive boost. But I think people were starting to realize, they've got to monetize, and questions are being asked, right? So if we do see basically some companies where they under-deliver, I do think there's still going to be a short-term correction to take the froth out of the market. But, from a medium-term perspective, the AI theme is revolutionary. So I do think in the medium term, the trend will continue, and it's likely to continue higher. But I'd expect a bit of volatility if some of these companies under-deliver.
All right, Kai, I really appreciate your time. Thank you. Happy New Year. I think we're still allowed to say that. There is a statute of limitations at some point that Larry, what's his name? That did Seinfeld. You know what, the guy I'm talking about? Yeah. He claims it's around this date, but we'll give it one more day. Thank you, Kai.
Thank you, guys.
That went well. I stopped saying Happy New Year on my emails, but when you haven't talked to somebody for a little while,
it feels rude.
So I've started saying, I hope you had a nice break.
Oh, that's a good one.
There you go. You can use it. All right, stock of the daytime, it was 4D Medical. 4DX is the ticker code. Andrew Whiteland from DP Wealth Advisory and Zach Riaz from Banyan Tree. They had not been together before. I've got to say, it was a good episode. They got along very well. Listen to this.
I would say it's a hold at this stage, Nadine. I think it's one that has got amazing promise, but from a valuation point of view, just because they've got a couple of these, or four as it would be now, preeminent institutions on the books, we actually really need to see some revenue to justify a $2.4 billion valuation. So it's a hold at this stage. If it was to fall back closer to that 250, heaven forbid, that might be one to sort of look at, but at this stage it's a hold.
The story for this stock will continue to bounce around with new deals announced. Just don't forget that Pro Medicus, who's on the share registry, is in all the major medical universities and teaching units in the US. Mm-hmm. These guys will certainly be getting a helping hand on that. And if they get on that chain, the stock price will basically move on every new medical center that gets announced. And like today, up 14%. I'm not justifying it, but that's the story it's going to be. So I am, new year, I want to be very, very optimistic. But I'm leaning towards a buy, but I couldn't just right now. But I would not be surprised if more deals are announced this year, and therefore this continues to rise.
So hold from both of those guests. If you would like to hear their extended thoughts on that, you can go to the website, ausbiz.com.au if you're on podcast, and you go to the top, we've got a series link and we have all of the stock of the days. Or guess what? We have a YouTube channel. You can just go there if you like.
All right, let's have a look at the market leaders. And Linus, of course, is up there, up by some 15%. Now, Silix Systems...
It's down yesterday.
Yeah, but up the day before?
Yeah, so they got a report, I guess, from the U.S. Department of Energy that clearly there was something in it that wasn't great. They didn't get some money, I think. But yeah, climbing back today. Hyperion X also has operations in the States and an agreement with the Department of War, which could be a good thing, I guess, these days. Great Land Gold as well. The gold... gold miners still doing
gold
well.
And nickel players on those rising commodity prices. All right, the laggards today were a little bit of the gold players too, perhaps that have run a little bit hard. Harvey Norman, interesting as we start to price rate expectations, and then of course those energy players as we saw that impact to WTI crude in particular following US President Trump's post on social media.
Yeah, it was President Trump's what? I saw his little dance that he did at a Republican address. Interesting times we are living in, quite scary as well. Manuka Resources up by 32%, 15 cents per share. Island Pharma up by 6 cents to 47 cents per share.
Yeah, and we just spoke to them, so you can catch that interview, of course,
that's right.
On our website shortly. Once the person who subs them gets out there and subs them. All right, let's have a look at what we're seeing in terms of some of the laggards, and Investigator Silver down by around 7%.
All right, tonight we get an inflation read from Europe, expected to come in at around 2%. The PMI for December in the US expected to edge up. And guess what? We get that private read on jobs from ADP that leads into, drum roll please, the non-farm payroll report on Friday.
Yeah, and JOLTS as well, so a couple of pieces of jobs data there. Let's have a look at what we are expecting tomorrow. International goods trade for the month of November, a $4.6 billion surplus is expected.
Well, I cannot believe that it is almost Thursday already. So here's a picture of what the market did on this Wednesday, the 7th of January. That's the COB Australia Index. Of course, we've had a few more trades going through the S&P ASX 200, and it has closed just about 0.15% higher, so still in positive territory at 8,696. But to your point, Juliet, we saw that initial spike, that relief rally, you could say, after that 11:30 monthly inflation read, keeping in mind we still do have the quarterly one at the end of the month.
Yeah, and the Aussie dollar went the other way to that, but still incredibly strong, I think, around those October 2024 highs. Great time if you are planning to go overseas.
No, you're not.
Maybe I am. All right, we'll see you tomorrow while we discuss this off air.
Have a good night.